So hello friends, welcome to my channel name in coaching center. So today I'm going to explain your chartered accounts, that is the accounting terminology. So disclosure is also you can say. So in part 1 video you have learned some of the words about in the accountings. Now let us continue. So in the last video I said I will continue it in my next video. So let's continue with some more words in the accountings to learn about some more words in the accounting. Next is franchise. So till now you learned about FOB, free on board destination. Next is franchise, a business that has been licensed to sell the product of a manufacturer or to offer a particular service in a given area is called as franchise. It gives you the license to sell the products or manufacture in a particular service in the given area, in that given area where you have taken. Next is the GAAP, General Accepting Accounting Principles, a priority listing that is made up of statements of accounting principles that is issued by AICPA, that is American Institute of Central Certified Public Accountants, and FASB, that is Financial Accounting Standards Board. Next is General that is GJ, we also say, a book of original entry in a double entry system, and the general lists transactions and indicated accounts to which they are posted, and the general includes all transactions. That's all the transactions which are not included in some of the specific general used, like cash receipts, cash disbursement, and other common transactions. Next is general ledger. GL, a book in which monetary transactions of a business are posted. It is a book in which a monetary transaction of the business are posted from a general, and it is the final record from which financial statements. It is a record from which financial statements are prepared, and the general ledgers accounts are often the control accounts which report totals of details including in subsidiary ledgers also. Next, goodwill. So an intangible asset that exists when a business is valued at more than the fair market value of its net assets, and goodwill is usually due to the reputation, good customer relations, and many other things. Next is gross profit, the amount by which the net sales exceed the cost of goods sold is the gross profit. And cross sale, total recorded sales before deducting any sales discounts or sales returns and allowance. The total amount that you get before deducting the money of sales discount or giving some sales returns. Before that, the money that is there, it is called the gross sales. Next is internal control, policies and procedures that are designed to provide the reasonable assurance that a company's objectives, that assurance for them there is a company's objective will be achieved. And also it consists of control, environment, risk assessment, control activities, information and communications, and monetary is called as the internal control. Next is interest. It is the cost of the use of money. The interest is the cost of the use of money, and interest rate, the cost of money expressed in the annual percentage. How much cost of the money is expended in the expenditure is done in the annual. Interest rate is the annual percentage. How much cost of money is expressed in the annual percentage is the interest rate. Next is inventory. Goods held for sale or resale is called as the inventory. Inventory turnover ratio, a measure of the management of inventory computed by dividing costs of goods sold, COGS, by the average inventory of a period. By the average inventory of period, the amount you have got. When you divide, you will get the inventory turnover ratio. Next, invoice, an itemized list of goods shipped or services. An itemized list of goods shipped or service rendered with cost is the invoice. Next is general. So it is a book or original entry in a double entry booking keeping system. So the general lists all transaction. It has all transaction and indicates the accounts to which they are posted. So general, as you know, it is a book that has original entities, and in a double entry bookkeeping system, the general list, it has all transaction and indicates the accounts to which they should be posted or sent. Next, general entry, a recording of a transaction where debits equal credits or there is the general entry. Next, just-in-time inventory. So an inventory system that minimizes inventory cost, and it arranges for suppliers to deliver small quantities of raw material just before those units are needed in production is the just-in-time inventory. And storing, inserting and handling raw materials or costs that add no values to the product, and so or they are the minimized in just-in-time system. Next is kidding. So drawing a bank check on insufficient funds to take advantage of the lag time requirement of collection, and to certainly not ethical, and under some circumstance very illegal. They are very sometimes illegal. Next is leases. Long time non-cancelable committees. In a lease, the lessee acquires the required right to use property owned by the lessor, and even though the no legal transaction of title occurs, many lessees they may transfer substantially all the risk and ownership benefits they may transfer. Next, LIFO, that is lost in first out. Assumptions of inventory valuation is the LIFO. Next, limited liability. The legal protection given to stockholders of a corporation is the limited liabilities, and a stockholder liability extend only to the total of his capital contribution is the limited liability. Next is limited partnership. So a limited partnership is one in which one or more partners have limited liability up to their investment to creditors. In the event of this failure of the business, the general partners manages the business, they manages their business, and limited partners are not involved in daily activities. They are not involved and they are not given to manage the business. Next is liquidation. The process of dissolving a business by selling the assets. The process of dissolving a business by selling the assets and paying the debits and distributing the remaining equity to the owners is called as the liquidation. And liquidity, the availability of cash or ability to obtain it quickly is called as the liquidity, also used to determine debit repaying ability. It is also used to give a debit repaying ability. Next, long-term liability. These are liabilities in which your business that are due in more than 1 year. For example, like mortgage payable, they are in long-term liability. They are the long-term liability. And long cost or market LCM, a method of valuing assets at the lower of its original cost or current market value is the LCM, or the lower cost or market. Next is the modified accrual. So an accounting method that is a combination of cash and accrual basis. So recognition is given to the revenue when it is available and measurable. So expenditure are usually reflected in the accounting period of expenditure, and in which the liability is incurred, they are reflected in the accounting period. Next, mutual agencies. The right of all partners in a partnership to act as agents for the normal business operations of the partnership with the authority to bind it to the business agreement is the mutual agencies. Net assets. Owner's equity. The ownership interest in the assets of an entity equals total assets minus total liabilities is the net assets. Next, net income, the difference between your business total revenue and its total expenditure, and this caption and amount is usually found at the bottom of the company income statement and the bottom and it is also known as the bottom line. Next, net operating loss. A net operating loss results when business expenses exceed business income for the operating period. Next, operating lease. A simple rental agreement is the operating lease. Next, operating leverage. Next, the extent to which fixed cost or part of a company's cost structure, the higher the proportion of fixed cost and the faster income increases or decreases with the sales volumes. Next, operation performance ratio, and overall measures of the efficiency of operations during a period computed by dividing net income by net sales is the operating performance ratio. Next, opportunity cost, a basic term from the disciplines of economics and accounting, is the opportunity cost, and in these circles the acceptancy definition of the word is the advantage of fortune as the result of the acceptance of a alternative is said. Outstanding stocks, issued stock that is still being held by investors is the outstanding stock. Next, owner's equity. Net assets, the owner's interest in the assets of the equity, equals total assets minus total liabilities is the owner's equity. Next, partnership. A partnership is an unincorporated business that has more than one owner is the partnership. Next, patent, an exclusive right granted for 17 years by the federal government to manufacture and sell any inventions, and patents can cover all sorts of inventions from physical devices to chemical process and also even software and algorithms. So the only restrictions they are the inventions by novel and not obvious to current practitioners of the art. So particular notation machines are specifically disallowed for getting a patent. Next, petty cash fund. So a small amount of cash kept on hand used for making miscellaneous payments is the petty cash fund. Next, prepaid expenses, amounts paid in advance to a credit or vendor for goods or services. Insurance premiums are a good examples. Prepaid expenses are a current assets because you have paid for goods or services you have not yet received. Next, present value of $1. So the value today of $1 to be received or paid at some future date give a specific interest rate for them. Next, profitability. A company is ability to generate revenue in excess of their cost incurred in producing those revenues is called as the profitability. Next, profit and loss statement, also it is known as the income statement or P&L. This statement shows your revenue and expenditure for a specific period of time. Next, proprietorship, a business owned by one person is called as proprietorship. And prospectus, a prospectus is prepared by an entity that wishes to issue securities to the investors. Includes in the prospectus and or financial statements disclosures business plans, overviews of corporation and many other things. Next, public companies, corporations whose stock is publicly traded is called as public companies. Qualified opinion, an opinion issued when an auditor determines this his audit has been limited in scope or the entity has not followed the GAAP, it is called as the qualified opinion. Next, reconciliation, a determination of the items that are necessary to bring the balance of two or more related accounts or statements into agreement is called as reconciliation. Next, recovery period, the time period designated by Congress for depreciating business assets can also be thought as the life of an asset. Next, retained earning. Profits of the business that have not been paid out to the owners as of the balance sheet date. The earnings have been retained for use in the business, and retaining earnings is an account in the equity sections of the balance sheet. It will be account. Next, return. A key considerations in the investment decision. It is reward for investing. It is the reward for investing, and the investor must compare the expected return for a given investment with the risk that is involved in that. Next, return on investment, ROI. So a measure of operating performance and efficiency in using assets computed by dividing net income by average total assets is called as return of investment. And revenue, increase in a company's resources from the sales of goods to services is called as the revenue. Next is corporations, formerly known as subchapters. S corporation, a corporation recognized as the regular corporation under state law, but it granted special status for federal income tax purposes. Next, salvage or residual value. So estimated value of an asset at the end of its useful life after disposal cost is called as salvage or residual value. Next, shareholder and stockholders. Individual or organizations that own shares of stock of a corporation is called as shareholders or stockholders. Solvency, a company's long-run ability to meet all financial obligations is called as solvency. Solo proprietorship, a business owned by a person is called as solo proprietorship. Trade credit, credit one from grants to another from to for the purpose of goods and services is called as trade credit. Transaction, it is an exchange of goods or services between business or individual and can also be other events having in the economic impact for their business. Next, trial balance, so a listing of all accounts balances that provides a test of whether total debits to the total credits. Next, unearned revenue, money received by a business before it is earned is the unearned revenue. Useful life, the life that an asset is expected to be useful to the company is called as useful life. Value, the worth of something, usually defined as the monetary or straight value of the item such as fair market value. Working capital, current assets minus current liability. Next is yield, the return of investment that can investor receives from dividends or interest expressed as percentage of the current market price of the security is the yield. Z cross, a Z cross is the total arrived at by combining several normal business ratio, and the weight given each ratio produces a score which is said to indicate the health of the business. So okay friends, this was your chapter, the accounting terminology. So I think you understand this chapter. So okay friends, like the video, comment on my video, and subscribe my channel and coaching center for more video. I will soon my next video explaining another chapter. Till then, take care.